Well, Wall Street stocks have lost some 50% of their value over the last 2.5 weeks alone. Good times, huh?
Yeah, no.
And you can imagine how a drop like that is shaking the confidence in the market.
And joining us with advice for worried consumers and investors is personal finance expert Carmen Wong Ulrich. She is author of The Real Cost of Living. Good morning, Carmen.
Good morning, guys.
Important time for you to be here. $1 trillion in wealth wiped out just yesterday. What are investors to do with their retirement savings, their 401ks, their IRAs right now?
Well, first of all, what you don't want to do is unfortunately what a lot of folks are doing, which is panicking. Any move that you make in a panic or out of fear is not going to serve you well down the road. So what you really want to do is you want to assess how far away from retirement are you. Don't pull all your money out and put into one asset class, like a metal, for example. Don't make moves like that. And look at where your money actually is. Do you know where you're actually invested? So most 401k providers give you access to free financial advisor. Call up your administrator, ask to meet with that advisor. Also, there's a free portfolio x-ray at morningstar.com, which is really useful to give you an idea of where your money actually is. So if you need to make some small adjustments, that can be something you can do. But you want to make sure to make no giant moves right now.
Don't just get excited about gold, for example.
But people see numbers like that, and I think they react on emotion, do they not? I mean,
well, here's the thing. You want to be positioned before this for something like this. So, for example, if you're 5 to 10 years out of retirement, you should not have the majority of your money in the market at this point anyway. So you want to make sure that you're positioned so that if you need to make a big move today, it's going to be 15% of your assets. It's going to be 20%. It's not going to be taking all of your assets and moving them into one class because you're going to fall behind. You can try to time your way out, but then you're going to have to time your way back in, and we know that everything that goes down comes up.
I guess the nice part about it, the silver lining here is it does cause people to kind of reassess their allocation. Let's talk about the near future now, what we see kind of, in the near future.
Well, here's the thing. Besides the markets, what we're looking at is confidence, of course. And as you know, most people, consumer confidence right now, last month went down to 2009 levels, 2 years ago in the midst of this recession. So consumers are not confident. And consumer confidence does a dance with consumer spending. Now, consumer spending is 70% of our economy. So if consumer confidence takes a dip, consumer spending takes the dip. And what that means is less spending, that means less economic growth, and that means the job market may not budge. And I think that's a big, big fear here.
And what about the rates then people pay on their mortgage, credit cards?
Yeah, I mean, down the road, and this is not something that's going to happen probably this month or even next month, credit card rates may go up, of course, auto loan rates, and home, of course, your mortgage rates may go up eventually. Now, those are at record low, so there really is no place to go but up. So here's the thing. If you have debt, continue to dig yourself out of credit card debt as soon as possible.
While it's cheap.
It's not even that cheap.
Speaking.
The average is about like 14, 15%. But also make sure if you're looking to buy or looking to refinance especially, do it as soon as you can so that you can lock in that low rate right now and before the market takes a little bit more of a dip. And make sure if you're buying that you're going to be staying put at least 5 to 10 years.
And just don't look at any of the business nets for about another 2 years or so.
There is that.
Just hide.
Except us.
Don't read the financial section. I'm kidding. Carmen, thanks.
Carmen, thank you.
Thank you, guys.